me this morning here in the studio, I'm joined by the Capital Network analyst Ed Stacey. Ed, good morning.
Good morning.
Taking a look today, Custodian REIT, an update of course out recently on their quarterly property valuation. Meanwhile, you've written a report on its strategic positioning. Give us a flavour of what's inside.
Yeah, so as you say, the quarterly valuation report is out, all in line with expectations. What we wanted to write about was the strategic positioning, because one thing we noticed was that in the last 12 months, Custodian was actually one of the very best performing REITs in the UK market. So one of the things we got in our report is just a list of some of the top performers as well as the performers at the bottom end. Remember, it was a tough year actually, 2018, for the REIT sector. And you hear, of course, about the headlines about Into and others, the big property names. When you look at the bottom performing REITs, it's all those big urban shopping malls, big prime London offices. The top performers are all the more kind of niche players. And Custodian, the niche angle really is they're diverse non-residential properties, so it's industrial, it's some retail, it's some office. It's very much a regional focus though, so it's outside London, it's Midlands, Northwest. And the key there is that they're still able to find in these markets properties that are giving a very strong rental income yield. So another thing we've got in our report is just a list of the rental income yields they're getting on the new acquisitions they made in the last year. And they're all between sort of 6.5% to 9.5% rental yields. So it's that big rental yield that's generating lots of cash for you, allowing you to pay out big dividends, and that's what's driven the performance for investors.
So clearly, Ed, dividend is key for Custodian REIT here.
Yeah, absolutely key. Since listing in 2014, Custodian has delivered a 7.3% annual, what they call an NAV total return. That's just a sort of good measure of shareholders' return for REITs. 7.3% per year. 70% of that, though, is coming just from the dividend payment to the shareholders. So the dividend is absolutely central to the story. And then what you have to think about is, well, okay, it's a nice dividend. How secure is it? And there's some very good metrics there in terms of the security side. The balance sheet gearing is low. It's always hovered around that sort of low 20% gearing. They also have low portfolio concentration. So their biggest tenant is just over 3% of their total portfolio. So they're not exposed to any one tenant. Also not exposed overly to any one sort of industry segment. And then finally, what you have is a dividend that is always fully covered by earnings. So they're not paying the dividend out of capital. So yes, dividend's very important, and it's also a very, very secure dividend.
Dividend central to the story, as you say. Just going back to what you said at the start, one of the better performing REITs in the UK in 2018 last year.
Yep.
You're expecting a similar performance this year?
Yep. So it was one of the best in 2018. In 2019, why are we confident it carries on performing? Well, because the performance is all coming from just that strong cash generation. We're seeing they're still able to acquire new properties with those strong yields. They're typically getting long rental agreements there, so everything's kind of pretty well nailed on in terms of that rental income. The company keeps generating cash, keeps paying the dividend. And the important thing is really, this is not a property speculation fund. This is absolutely a property income fund. And that's why we're very confident about 2019, yes.
Very good. For Ed's full report, click on the eye in the top right-hand corner of your screen. Ed, thanks very much indeed.
Thank you.